I see Dan coming in here. Good to see you, Dan.
Hey, buddy.
How are you, sir?
I'm doing okay. Sorry, I'm a couple minutes late.
No problem.
Um, Duty called. When you're at home and you got three dogs and a wife, sometimes stuff happens.
I get it. My kids are both home from school today. So
Oh,
I
wow.
went upstairs a couple of minutes ago. My son's like, Dad, can you make me a bagel? And I'm like, I can't do it right now. You got to get something out of the freezer. I got to go. So I know
Wow.
all about those responsibilities. It's all good. All right, let's get going with things. As always, not here for legal advice or tax advice, but we are here to help you make money in the crypto market. Technically, where do we stand? Bitcoin is 6% above the 50-day moving average. Ethereum, 3% above the 50-day moving average. Solana outperforming. And I'll show you some charts that prove that. It's now 15% above the 50-day moving average. Bitcoin made a lower low on the daily chart today on this current daily candle. Solana did not. It actually made a higher low. So definitely seeing some relative strength into Solana. For us manlets that hold Sol, we like that. Aave is at the 50-day moving average. We're going to watch this one closely. This one is on our open idea list, but if we get two consecutive closes under the 50-day moving average, then I'm going to remove it from the list. It at one point was performing really well. It went from, I think, the 130 range up to 160, something like that, but it's since come down. It's just been a bit of a laggard lately. And that happens. The hype for Aave was that that's where Donald Trump's crypto project was going to be made on. It was going to be made on Aave. And so there's a bit of a hype trade there, but that has since subsided. So we'll see. Does Aave have a future? I definitely think so. But if it is unable to hold above that 50-day moving average, then we will remove it from our open idea list. Okay, and Sui is back under $2. It's now under 21 EMA, still above the 50-day, but I had mentioned to a handful of people in the trading chat, in the Crypto Market Mentor trading chat, that as soon as you see some of these altcoins break support, and Laura actually reminded me of this, as soon as you see them break support, you want to just step aside if it's more of a speculative trade, because a lot of times you can get, and we've seen them, these sharp moves down, and that may offer great buying opportunities, but it can also cause you to hold dead money if you're waiting for that rebound to happen. So Sui's fine trend-wise above the 50-day moving average, but it's still just kind of lagging. Keep in mind, I mean, this thing moved well over 100% in the past couple of months, so it's due for a rest. As you know, macroeconomics has been really important when it comes to crypto because global liquidity and money printing, et cetera, that helps drive digital assets. So we'll get into what the crypto picture, or sorry, what the macro picture looks like right now, and then how I think that could affect crypto and ultimately gold and stocks. In terms of economic data reports, we did have the existing home sales out today. They made a new low, not surprising because interest rates still remain elevated. Later today, we have the Fed's beige book, which would be interesting to see. And then tomorrow, jobless claims and S&P flash PMI. So we'll see how the market reacts to this. And durable goods on Friday, not really that big of a deal, at least from what I understand. Next week, though, is a bit more important. We have ADP on Wednesday and GDP on Wednesday. Most of the important data points come out before the market opens. And so anything that you see coming at 8:30, that's typically somewhat more important than something that comes out intraday. Thursday, we have personal income, PCE, and the core PCE index. That's an inflationary gauge that the Fed does look at. Friday, employment report, hourly wages, and ISM. So lots to do next week. This week, it's a bit slower, and I think that's okay. We have 15 days until the next Fed meeting. As it stands right now, the market swaps are pricing in a 25 basis point cut. At one point, it looked like they were going to do 50 again, and this has shifted, and we've actually seen quite a shift in the 10-year because of that. And we'll get into that here in a minute. But this is where we stand right now. It looks like the highest probability for the November the 7th meeting is for a 25 basis point cut. The U.S. economy is a lot stronger than other economies like the ECB and in Canada. In terms of inflation, where do we stand right now? This is from Trueflation, and this is their I think, better gauge of inflation. And we can see that inflation has come back up from the middle of September to now. We have a bit of a bounce here. And for the first time in a while, the Trueflation index is pretty close to what the government is reporting. And again, we're seeing a bit of a bounce here in the 10-year because of that. Okay, in Canada here, the Bank of Canada has delivered a 50 basis point cut. As they say, inflation is now back on target. That's great. We're actually just refining our mortgage. Our mortgage is up. So we will like this as mortgage holders in Canada. Now, in terms of U.S. cuts, the Fed's Neil Kashkari was on TV on Bloomberg doing an interview, and he said that he expects a slower pace of cuts over the coming quarter. So don't expect a jumbo style cut like we just had in Canada and the United States. I'm so sorry. Your economy is just too darn strong for that. And that's one of the reasons that we are seeing a bounce here in the 10-year, because the economy is not falling off a cliff as many people had thought that it would. So rates are still elevated, but here on the 10-year, it's still actually lower than the current rate of interest here, as you can see from this gauge. So if history is a guide, rates shouldn't stay high for long. The path is lower. It's just a matter of how fast we get back down. But as long as the U.S. economy remains strong, they are still going to cut rates, but they're just likely going to do it at a slower pace, as Neil Kashkari had mentioned. I don't love Neil Kashkari. I think he's been wrong about a lot of things, but I think what he's saying about interest rates going down slower makes sense as long as the economy remains robust to some extent. Some people may say the economy is not that strong. We're seeing that because of, housing sales and stuff like that. That data came out today. But in whatever gauges that the Fed is using, they're saying that the economy is stronger than expected. So that's why that they would cut rates at a slower pace, as opposed to Canada, where our economy is basically a housing market and an auto sector and a commodity market where we don't make that much money on the commodities we sell. And China, for example, in Canada just said that they don't want our canola or something like that. So Canada's having trouble in terms of our economy, but in the U.S., you guys are a lot stronger. And so it just makes sense that you cut rates slower. If they start to cut rates fast, the market's going to look at that as a panic. And so keep that in mind. If they do say, we got to do a 50 basis point cut now, then the market could freak out a bit because they want more of a measured reduction in the rate, not a panic cut in the rate. The thing is, though, rates must come down. Interest rate costs on the debt that the U.S. has now surpasses defense and Medicare. So the rates have to come down. That's one of the reasons that we see these come down over time, because the debt is so high. And now, for the first time in history, the money that Americans are paying just to service the debt is higher than what you spend on defense, Medicare, and Medicaid. So keep that in mind in terms of why they would want to cut interest rates. It doesn't necessarily mean that the economy is weak, though I know that that's what they're saying. But in my opinion, it means that they don't want to pay this much on just money that they owe. In terms of GDP, this is debt to GDP, since we're on the topic of debt, and we can see that debt to GDP is still at all-time highs. So the amount that every American citizen owes is much higher than the amount that America is producing in terms of their gross domestic product. So how do you fix that problem? How do we get out of this? How do you get yourself out of massive debt? And what do we think that policymakers will do to solve this problem, or at least put a Band-Aid on this problem? And what we know from history is that you inflate your way out of it. So look at gold today. What's gold doing? It's making a new all-time high. What's Bitcoin doing? Yeah, it's down on the day, but it's still elevated. And stocks and commodities are working really well. So what you do is you inflate your way out of it, and you inflate things that don't cause inflation. Historically, in coming out of the 2000.com bust, one thing that America did is that they inflated the price of gold and they inflated the price of oil because they weren't worried about inflation being a problem. But now we are worried about inflation and the cost of goods being a problem. And so, how do you get around that? You inflate something that doesn't impact the cost of goods, but just allows you to get more money back in terms of tax receipts. And that's where we see an inflation in gold and Bitcoin and stocks and commodities. Because the more money you make in gold, Bitcoin, stocks, and commodities, the more money the US government takes in tax receipts. Paul Tudor Jones sees this. And so because we are seeing a new normal in terms of inflation, what he came out this week to say is that he is long Bitcoin, he's long gold, and he's long stocks and commodities. So he is following this system of, okay, if my money is going to be worth less down the road and things are going to cost more down the road, how can I outperform that so I get ahead and not just stay stagnant or lose money with a melting ice cube like just a normal dollar in a bank account that doesn't pay much interest. So this is why we want to focus on assets that go up quickly and assets that go up consistently over a period of time so that we can make as much money as possible and get ahead as opposed to continue to lose money, lose buying power with our dollars because of government spending and debt. China's seeing this as well. And again, we're talking about gold here. This isn't Gold Market Mentor, but I think a lot of these wheels are connected to one another. Typically, we'll see gold make a new high, and then we'll see Bitcoin make a new high. Gold performs really well, and then we see Bitcoin follow. And so even though China's central bank had been buying a lot of gold for a while and they had stopped, we're now seeing the appetite for gold pick up again. And of course, we're seeing that in the price. So it's not just here in the United States of America. We're also seeing countries around the world, like China, for example, who are trying to stimulate their economy by printing money, easing monetary conditions, but that also debases their currency. So how can they make up for that? They buy gold or they buy Bitcoin. Let's talk about market sentiment. Where are we right now? Actually, not too bad. We're in the greed section. Bitcoin is a few less than $10,000 off the all-time high. So this looks pretty normal to me. Greed is good. Dan talked about that in our Stock Market Mentor webinar the other day. And you want to be in one of these areas. This means things are working really well. If things are down here, as you know, they're not working that great. And we've come down in and around this area. Those ultimately ended up being great buying opportunities. So if you are able to use this as what it should be, a gauge of how the rest of the market is feeling, you can actually leverage this as a buying tool and say, oh, wow, we are in extreme fear. Nobody wants to buy right now. One side of the trade is really heavy. Maybe that's the time that I need to start scaling into a position with managed risk. Doesn't mean all the time when everything's at extreme greed, you just buy, buy, buy. But if history is any guide, a lot of times when things are in extreme greed, the sell side of that trade is way too high. The sell pressure is way too high, and it could flip to the other side. Now that happens in extreme fear. That happens in extreme greed as well. If this gets up to 100, my goodness, my friend, protect yourself. Move that stop up. Create some downside alerts, like really get protective, because that means the other side of the trade could be too heavy as well. If we just kind of live in this area where it's like greed, extreme greed, touch of that, and then back to greed, if we just live there, I mean, that could turn into a really nice, strong trend on the chart as we don't get too hot, but also don't get too cold. So people stay bullish enough to buy those dips. Let's look at money flow in terms of the crypto space, and we have seen a ton of money hit back into crypto. Look at this skyscraper here. This is the biggest since back in the summertime. And we saw $2.2 billion, the largest since July, come back into the space. Some people say this is because the market is pricing in a Donald Trump or Republican election win, though, as we know, both parties are positive on crypto. Maybe one side is a little more aggressive. That could drive a little more excitement. That could drive a little more money. And so we're seeing positive inflows for the first huge positive inflows for the first time in a long time. We had a nice little spike here last week, but this is on another level. And we can see that here in the Bitcoin ETFs as well. 253 million, 555 million, 371 million, 458, 470, 273, 294. I mean, this is not a drop in the bucket here. This is a big amount of money coming into a scarce, desirable asset like Bitcoin. Yeah, we had a bit of an outflow yesterday, but seriously, 79 million, that's all you got? What is this? An outflow for ants? Nothing, compared to what has come in. And look who's leading the inflows as well. BlackRock, 79, 288, 393, 309, 70, 329. 43 million yesterday. Bitcoin went down on Monday, right? Bitcoin went down off the highs. And look how much money came in from BlackRock, 329 million. They were buying the dips. And it's pretty clear. Ethereum, let's be honest, less exciting. Underperforming. Ethereum's under the 200-day moving average. I mentioned before, it's just off the 50-day. It's underperforming Bitcoin. It's underperforming Solana by a lot. But we are still seeing a slow trickle into the Ethereum ETFs. And I circled the biggest ones here on the chart, mostly coming from BlackRock. I think they're just going to own the market. I really do. I love Fidelity. I love Bitwise. Great. VanEck. Love it. But that's not where the big money's going. They're going to BlackRock. They're going to Fidelity. And they're going to Bitwise, which is pretty cool to see. iBit just surpassed Vanguard's total stock market ETF to secure the third spot in the top year-to-date flows. I included this information in the Crypto Quick Hits today. The Bitcoin ETFs are, well, frankly, the most successful ETF launch in the history of ETFs. Now, of course, it was an asset that came to market that had demand already. There was already people that wanted Bitcoin exposure but didn't want the hurdles of a crypto account. I get that, but still. Even people like Jim Bianco, who for the longest time had come out to say Bitcoin ETFs are just degens, no institutional money is buying, blah, 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 blah. He was on a panel, I think a couple of days ago. I'm not sure if I shared that video with you guys, but he was on a panel and he basically said, yep, it's really successful. And he's kind of swallowed his pride on that one. Now, again, some of these are small funds. A lot of them are hedge funds. So they're just trying to ride that momentum. But who cares, guys? From our perspective, if number go up, then we win. So, I don't care, I don't care if it's a major institution that's looking to hold this for 10 years or 15 years. Look, if they're making the number go up, that's all we want. That's how we make money. So regardless on what their time horizon is, we can trade the chart. We can use technical analysis. So we just want to be part of that trend and ride the momentum up if the big money's going in, and it looks like it is. Now, in terms of market sentiment, this is a chart of all the open interest by type, and we can see that people are more bullish than they are bearish. I'll just simplify it by that. And that's what we want to see. If this was flipped the other way, guys, then we want to be a lot more protective. We would probably not want to be in the market right now. And so this is a metric that we're going to want to watch among other metrics. But again, I think that this kind of stuff is helpful because it tells us where the money is flowing to. Flowing to calls, they're bullish. They think it's going up. Great. Let's follow that Momo. In terms of open interest by strike, the highest strike price open interest is above 70,000, 70,000 and above. Again, that's good. That's what we want to see. In the money calls, the highest expiration date is at the end of the year. So this is why I've been bullish on Bitcoin into the end of the year. We'll see what happens in January. Maybe we get a bit of a sell-off, bit of a rest. But in terms of the trend, we see it going up. We see more open interest as we get into the year, and we like that. And so if we just follow this and this plays out, then we'll know when it's time to get bearish, when it's time to step aside, because the puts will start rolling in. And finally, this is just current day. And what expiration, what strike are the highest ones by current day? By volume, 80,000 by the end of November. Obviously, it's not guaranteed. May not happen at all. But again, this is what the options market is looking at. So maybe we get a bit of a gamma squeeze. We'll see. Let's get into politics. As always, I like to take a sip of coffee before politics. We all take a little breath. We're all friends, no matter what happens at the end of this.
Oh, man.
Sorry, Dan. We're going to be friends after.
I'm not saying a thing, baby.
I don't care who I don't care who you all vote for. Not my deal. I'm just here
I've
to make
learned
money.
my lesson. I've learned my lesson. I'm just like, I'm muting my mic. Bye.
Okay.
No, I'm kidding. I'm not muting it, but
I
I'm
know.
muting myself.
It's all good, brother. So where are we in terms of the betting market? We look at two major betting markets. For those of you who are new here, we like to look at Poly Market and we like to look at Predicted. Those are the most liquid, for the most part, most liquid betting markets, and their data is public. So as it stands right now, the betting market is leaning in favor of former U.S. President Donald Trump. Now, for those of you on the other side, you may look at this and go, "Whoa, I don't like that." Maybe it doesn't. I mean, again, this is a betting market. This is just what people are betting on. It may go the other way. And from what I understand, a lot of the money that's coming into Poly Market is international money, not locally U.S. money. So this is what the market thinks is going to happen, and we'll see how it plays out. In terms of the election, we're about 12 days away from the election, and this is what the betting market thinks the map is going to look like. Again, could be wrong. We don't know. It's a guess. On Predicted also has U.S. President Trump in the lead. This may be why we're seeing this pop up, this maintained bid when it comes to cryptocurrency, because former U.S. President Donald Trump's crypto policy is more aggressive than Kamala Harris's policy. They're both exciting, but one may accelerate Bitcoin faster. One may accelerate the digital asset ecosystem faster. Though they both, again, it doesn't really matter from our perspective who wins, because no matter who wins, a crypto-friendly Congress is more likely in the next 4 years than it was in the past 4 years. So from our perspective, from just trying to make money, again, it doesn't really matter who wins. Crypto is going to win. Let's look at Bitcoin. There is no second best. What drives Bitcoin? It's global liquidity. And we can see that here based on the chart from 2020 and 2021. When global liquidity was hitting new highs, Bitcoin was following. When global liquidity was breaking down, Bitcoin was following. Recently, we've had this big arbitrage where we see global liquidity continue to wedge down, but we've seen Bitcoin move up higher. Now, why is that? My guess, because of the Bitcoin ETFs, because over $20 billion has come into Bitcoin in the past couple of months. So that's helped to keep Bitcoin elevated and near the highs, even though we see global liquidity backtesting this wedge. Now, if we do get a pop up in global liquidity and a potential catch-up trade, then I think Bitcoin is really going to be the trade that you want to be in going forward. So this is something we're watching. It's not a perfect correlation, but my goodness, it's pretty darn close in the past. So now we're just waiting for that catch-up to happen. This is M2 money supply. This is money from all around the world. Global M2 versus in the US dollar. So it's just US dollars globally, not just locally in the US, because people use US dollars in other countries as well. And we did see this nice pop up in global liquidity. For those of you who are new here, there is a 10-week lag between when we see a pop up in global liquidity and when that global liquidity finally trickles down to Bitcoin. And so that brings us, in past webinars, we've measured out the date, and that brings us to the first couple of weeks of November, where ideally we should see that global liquidity start to hit Bitcoin and start to push prices higher. So that's something that we're watching to play out. That's what happened in the past. In the past, when we saw a breakout in global liquidity, there was 10 weeks between that breakout and the breakout in Bitcoin. So we're watching for that to happen again. Now, what might help that? Market stimulus from China. As we know, we've talked about on this webinar before that China had been unleashing some stimulus. They did about 6 trillion yuan. People were asking for more, and we saw that nice big pop come up in China stocks, but they had that trade has since come off a bit off of the highs. Why is that? Because the market wants more. And so if we do see more stimulus coming out of China in the couple of weeks, that's going to help global liquidity, and that could turn into a big pop in Bitcoin as well. Even though it's China, it's still just a hedge essentially against money printing. That's what Bitcoin can be. Now let's flip over to mining really quick. In the crypto quick hits this morning, I mentioned that the mining difficulty has hit a new all-time high. So that means the amount of energy, the amount of power, the amount of effort that Bitcoin miners have to make to actually produce the Bitcoin. Now, we have seen a major lag in Bitcoin miners lately. We're seeing MicroStrategy hit highs. We're seeing some Bitcoin miners hit highs, but a lot of them are new to this cycle. Some of the OG Bitcoin miners like Riot and Marathon have been lagging. And if you look at a complex of the Bitcoin mining ETF against MicroStrategy, it's lagging massively. So this is MicroStrategy in blue, and this is a Bitcoin mining ETF from Valkyrie in maroon. I don't know what color that is. Pinkish, maybe dark pink. Who knows? The point is, look at the percentage gain if you just held MicroStrategy versus the percentage loss if you were trying to trade the Bitcoin miners. Guys, this is why we have been ignoring, for the most part, the major Bitcoin mining complex, because as we've talked about, the higher the hash rate, the more expensive it is for them to produce the Bitcoin, the more they need the price of Bitcoin to go up before they make any money. So if we do see that big pop up in the price of Bitcoin, then we should see the miners catch up. But in the now, we have not seen that because it's harder than ever for them to produce that Bitcoin. And so mining Bitcoin has not been as lucrative of a business. And we're seeing that because a lot of these Bitcoin miners are shifting to say, oh, what else can we do with these GPUs? Oh, we can be AI data centers. Let's do that too. We're seeing that happen with Core Scientific, for example, and that stock is near the all-time high. So this is one of the reasons that I've been focused personally in my portfolio on stocks like MicroStrategy, and I've been ignoring, for the most part, the Bitcoin miners. There have been some good trades here and there. TeraWulf is moving nicely. And we got news this week that Stanley Druckenmiller's fund owns TeraWulf, so he's exposed to this space as well. But it's really kind of, you've had to be a stock picker when it comes to these Bitcoin mining stocks, because they just haven't been performing as well as stocks like MicroStrategy. Now, in terms of Bitcoin apparent demand, we are still seeing a nice increase here in demand. If I zoom back here, I'll just give you a quick overview of this chart. The black line is the price of Bitcoin. The green is apparent demand, and the red is negative apparent demand. So when they are selling the Bitcoin, it's red. When they're buying the Bitcoin, it's green. Keep it simple. Even in this consolidation, we did see some selling there, but we know who was that? We talked about this a few weeks ago. It was the actual Bitcoin miners. At one point, the Bitcoin miners were selling nearly 3,000 BTC a day. That's a major drag on the market. That's one of the reasons that the Bitcoin market didn't break out, because the miners were net sellers. Now, because the hash rate is so high, they can't sell because they would be selling at a significant loss. So they are not selling because they're waiting for the prices to go up. Now we have this increase in apparent demand. What is that? Let's go back. It's right here. This Bitcoin ETF inflow, the $2.2 billion that we've seen come in the market in the past week and a half. So that's what we're seeing play out. We're also seeing it play out on chain. So we like that. We like that that confirmation of that demand coming back into the Bitcoin market. This is again just accumulator addresses, just another way to look at it. So, who's buying the Bitcoin? It's people who have a lot of Bitcoin already. That would lead us to believe it's the Bitcoin ETFs that are the main driver of the price action here for BTC. If I go into the whales, we can see the whales have increased their holdings. And who are the whales right now in this market? It's the Bitcoin ETFs with tens of thousands, 200,000 Bitcoin under their belts. So again, we're just getting confluence. We're getting confirmation of the ETFs are buying. We're seeing it happen on chain. They're really buying the Bitcoin. And again, we're able to confirm that it's actually happening. Okay, let's get into some top news, and then we will get to your questions. If you have any questions, please use the Q&A box. The SEC has given the green light for options on Bitcoin ETFs. So this is good. It's probably, I'm going to assume the IBIT ETF, the Invesco Galaxy ETF, and I would imagine the Fidelity one would have options as well. As I mentioned today in the Crypto Quick Hits, we don't know the date for this. And from what I understand, uh, whoever issues the options, they are not like the SEC and they have a hard date that they have to do something by. They could really push this, kick the can down the road till next year, and no one could do anything about that. So just keep an eye out for that to happen. When it comes down, I'll include it in the Crypto Quick Hits, but there is no date right now, and they won't release a date until they know for sure. There's a lot of back end stuff that they have to do. But if this happens, it could do a couple of things. It could increase volatility, both up and down, but it could also allow people to hedge. So we may see more money coming into the Bitcoin ETFs because any major fund or whatever can hedge that with put options or selling calls or whatever it might be. So this is something that I think is going to help the Bitcoin ETFs grow even more than they are right now. This is an interesting thing. So River is kind of like a Bitcoin bank. It's a bank that likes Bitcoin, and they have launched a Bitcoin interest on cash account. So if you have money in with River, they will give you interest, and that interest will be paid back in Bitcoin. And that's new. I've never heard of anything like that. Of course, all of your cash is FDIC insured, so it's not like you're just giving your cash away and hoping it works out, like like we saw with some of these Bitcoin custody players like Galaxy, etc. And again, the Bitcoin is a full reserve custody. So this I think is pretty interesting. Just another way to distribute Bitcoin to people who want it, but they also want the security of holding cash. I mentioned Core Scientific. What's Core Scientific doing right now? It's just about it's down 2% today, but we saw a nice big move yesterday in Core Scientific coming on higher than average volume. And one of the things that has helped this stock is the fact that, again, they are doing some AI deals. So they are trying to diversify their company to some extent to say we have all of this compute power. What else can we do with it? If we're making money with Bitcoin, great, but can we make even more money just with AI data centers? We talked last week for Stock Market Mentor members. I mentioned the data center trade being on, and I talked about how utilities were breaking out because we saw major players, Microsoft, Amazon, etc., kind of get into the utility game to ensure power for their forthcoming data centers. And so this is another just way to play the AI trade, but it also has a Bitcoin element to it. Yesterday was the highest daily economic activity in Solana's history. I mentioned Solana's outperformance, and I think a lot of the fact that a lot of the reason that this is holding up much better is the fact that we're seeing continued economic activity. For those of you who are new to Crypto Market Mentor, you'll know, or maybe you don't know, but you will now, that the way we value these chains is we value it based on the transaction volume, the dollar amount of transactions, and the amount of wallets that there are. So if you can just measure those of how many people are using the chain, what are they doing with the chain, and how much money are they distributing back and forth on the chain, or how many fees is the chain generating, then you can get a good sense of what a valuable chain is versus what a chain that doesn't really have much value and shouldn't go up is. And typically, if you can spot this ahead of time, you can get yourself in a position where you're in a great chain whose fundamentals are leading price action. So this is what we want to see. This is one of the reasons that I think Solana is a great idea for this coming cycle. Brad had a great question, and I wanted to save it here for the webinar. He said, Scott, I'm trying to learn more about liquidation heat maps and still have questions. I was wondering if you could cover the basics and how we should look at that map in different time frames for different purposes in your next webinar. These are great questions, guys. I love this stuff. Anytime you want me to do some sort of deep dive on a data point that I'm sharing with you, absolutely, the webinar is a great place to do it. So let's do that now. This is a 3-day heat map of the Binance BTC USD liquidation. So what this means is that the amount of yellow on the chart is the amount of leverage that has built up in the system. So, for those of you who don't know, there are no margin calls in crypto. You just get liquidated. The software just takes you out. So if you are doing, I don't think Coinbase allows this, but if for whatever reason, if you have a VPN and you're using an offshore exchange or a version of Binance that isn't technically legal in the United States, what you can do is you can use leverage. And so let's say I want to do 10x on $100. Okay, now I got $1,000 worth of Bitcoin. They will tell you what your liquidation price is. And that means if it hits that price, your money's gone. You lost 100, you lost 1,000. They've taken your Bitcoin back. And so these yellow lines here represent the amount of leverage that is built up. And so on the downside, that would be the amount of long leverage that's built up. And on the upside, so on the upside, on the downside here, long leverage. On the upside here, short leverage. So that means if prices go here, a certain amount of money will be taken back from the market essentially. And so that will be a forced short coverage. And we've seen that happen on some of the charts. If you see Bitcoins, I've talked about this before, if you see Bitcoin's price action go up really quick, where it's like 66,000, 66, 100, 200, 300, and it's just going pop, 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 pop. Each one of those pops are people getting liquidated out of their position. It's great for short-term price action, but the problem is once all those shorts are liquidated, the bids then have to catch up. And if it happens really fast, they can't catch up in time. And that's where we get these big shoots up where it'll go from like 66,000 to 68,000 back to 66.5. It's because the bid hasn't caught up and the liquidations just happen so quickly. Again, for short-term traders, that's great because what you can do is set a sell note or a sell order at, let's say, just above this liquidation level. So let's say I want to sell at 60, 68.5. I would just put my sell order in there. And then if prices get up and get really extended above there, then I get taken out, I sell because I want to sell, and then when it comes back down after that liquidation flush happens, then I can rebid, re-enter, and potentially buy back at a lower price. So that's if you're trying to be an active investor. So that's what I would look at this as, Brad. I'd look at it more of these are where the shorts are going to get squeezed. These are where the longs are going to get squeezed. By squeezed, I of course mean taken out of their position. So hopefully that's helpful. And then you can just change the time frame. So this is a 3-day heat map. You can change it to a weekly heat map. You can change it to a 3-week heat map. You can do 24 hours and stuff like that. So this is a cool resource. And if you need this link, by the way, I can share this link with you in the crypto chat. So that's all I have for you today in terms of my presentation. I hope that was helpful, guys. I know it's a bit shorter than my other one, but I really just wanted to keep things focused this time around because sometimes I find we can just get deep down some rabbit holes and deep down the macro rabbit hole, and a lot of times it's not super exciting. Okay, let's go. Let's answer some questions here. If you have any questions, no 7 days down for the election. Not sure what that means. What's in the coffee from David? This is just Nespresso. It's just cream and sugar. Very simple. Thanks for asking. Okay. David says Bitcoin is at 65.9. Yep, I see that. So again, Bitcoin is underperforming versus Solana right now, making a lower low under the 8-day exponential period moving average. But keep in note, David, it's on low volume. And if we bring in the SPY, what's SPY doing? SPY's also down on the day under the 8-day. So the overall general market is weak, and that weakness I see coming into the crypto space right here. So I think if you're looking for a reason on why it's down, I think the stock market being down, I think the 10-year being up, I think the dollar being up is pretty clear on why Bitcoin and digital assets are underperforming right now. But still up versus versus where it was. Keep in mind, I said this the other day, Bitcoin was at 58,000 just 11 days ago, 12 days ago. It was at 58,000. And then it ran up to 69,000 basically in a straight shot. So we're getting the ebb to the flow right now. And now we just got to see where the buyers step back in. If we continue to see weakness in the stock market, however, that may come into the crypto space as people just go a bit risk off. But as I've said from the beginning, 70,000 is the key level. Anything under 70,000, my friends, is the chop zone. When we get above 70,000, then potentially we're in the banana zone, but we're not there yet. Here's Ethereum. It's also under the 21-day EMA, just above the 50-day. If this bounces off the 50-day moving average, that could be a buy opportunity. And then you'd want to look at something like ETHA if you don't have a crypto account. And that coming down to the 50-day moving average could be a buy opportunity, printing a higher low as well. One issue that I've had with the Ethereum ETF is just how wide and loose it is. But if I bring up this upward sloping trend line, if we see further downside, maybe we come down here into the 18 range. If we get some longs getting liquidated, I see we're just making new lows on Bitcoin now. So if we do come down here, this could potentially be a buy opportunity for a swing back up here to around 2070. For a breakout on Ethereum, 2070 I think makes sense. That's just above that 2700 level on ETH. If I go back to ETH, above 2,700, that would be a breakout to a new high. Keep in mind, we have that downward sloping 200-day moving average to contend with. So it's still an underperformer, and that's why Solana is my biggest holding right now, because Solana is not an underperformer. It's above all the major moving averages. It's even holding up better than Bitcoin right now. And we can see that if we look at the Solana Bitcoin chart. We see this making new highs. So this is Solana versus Bitcoin. And if we bring in the Solana Ethereum chart, this is now making a new all-time high. So Solana is outperforming Ethereum. If it's me, guys, my money's in Solana, and I'm not even touching Ethereum right here until it can make a new high, because it's clear to me that Solana is winning the battle, winning the race right now. Will that always be the case? No idea. But in terms of what I want to do with my money right here, right now, my money's on Sol. Mention the dollar. It's making a new high here today. Again, not great for risk assets. This had been rallying in the face of the market going higher. And today we are seeing SPY under the 8-day. Maybe that's playing a part. 10-year also, though it is coming off the highs here. I mentioned this head and shoulders pattern breakdown, but again, the economy is not falling off a cliff like many of us thought it was. And this is coming back. But if it fails, again, at the 200-day moving average, as we get into the Fed meeting on November the 7th, maybe we see a rally in crypto again. Question here from Randall. Is a Solana ETF available? Great question, Randall. There are 2 Solana ETFs that I'm aware of, and I just got to find it on my list here. I think I collapsed it. It's under Tier 2 funds and indexes. If you want my list and you don't have it already, I did post it in the active trading room. You can just look for it or ask again for the link. The only two Solana ETFs that I know of are GSOL, which is the one run by Grayscale. It has traded a whopping 3,000 shares today. And then the other one is OSOL from Osprey, and it's traded a whopping 13,000. And this is massively underperforming. So, Randall, I would just be careful with any of these Solana ETFs. My friend, it'll be much easier if you just open up a Coinbase account because you're going to get that performance. These just aren't vehicles that I would recommend. I can't. It's in a downtrend. How is this in a downtrend and Solana's in an uptrend? It doesn't make any sense to me. So I would just avoid these if possible. You know, I've had some people ask me about GSOL in the past. Again, it's traded 3,000 shares today, guys. Like it's tough for me to say yes, but if you refuse to open up a Coinbase account, then, maybe you could take a couple of shares of this, but I would just be careful because again, it's a Grayscale product and we know what we know how they trade. Not well, typically. Okay, let's get into MSTR. MicroStrategy just off the highs here, still above the 8-day. Earnings are coming up next week. As we know, we may get a positive reaction. We may get a negative reaction. The last couple of times, they've been negative earnings. They haven't implemented fair value accounting yet. They won't do that until their first earnings report in 2025. So don't look for MicroStrategy to say, look how much money we made in our Bitcoin. It's not happening yet. They're waiting for 2025 when other corporations do that. By the way, if you haven't already, check out that video that I shared of MicroStrategy CEO Michael Saylor's his interview with that lady from New Zealand. There's two parts. The first part is all basically him talking about what exactly he's doing with MicroStrategy as a stock. And the TLDR is he's trying to essentially service the bond market because no one out there now is offering Bitcoin bonds. And the bond market, as we know, is super deep and super liquid. And so what MicroStrategy is trying to do is they're just trying to service people who can't buy Bitcoin but want to buy bonds. And so they will issue corporate bonds, et cetera, for $1 billion. They'll take that money, they'll buy Bitcoin. And the idea is if Bitcoin goes up more than 7% in the next 4 years, then they've made money. Historically, Bitcoin goes up 40% a year on average. So the probability is that that's going to keep working up until we hit a bear market, and then it won't keep working. So this is how MicroStrategy is trying to run their company. Yes, they are a software company, as we know, but they are also trying to be essentially a Bitcoin bank for people who their rules are that they have to buy bonds because they're fixed income investors or something. Watch the interview. It's pretty interesting. MSTX, I own some MSTX. I did buy some on this day here. Thanks to my friend Rick for getting me into this. Oh, no, sorry, it's this day here. I did buy. So my first entry was around 36 something. And then I added on this day, I think it was this one here. I think I added at 42.40. So yeah, I'm still good on this one. But it is just a small portion of my portfolio because it's so volatile. My main portfolio is just MicroStrategy, and so I'm I'm kind of I'm kind of having a little bit of fun here with this one, but ultimately, again, I think that MSTR is the trade, at least in the crypto trade that you want to be in, based on those metrics that we saw of it outperforming the miners, etc. TeraWulf, as I mentioned, really nice move here. I'd look for a pullback. Their earnings are coming up November the 12th. Core Scientific still above the moving averages. I think you just want to try and make this work. If it gets up to 15, 17, 19, that kind of range, maybe that's where you want to take some partial profits. Clean Spark back down to the 8-day. Choppy, sloppy. Someone posted a chart in the forum yesterday about Clean Spark, essentially saying that they think that this is going to be an inverse head and shoulders pattern where we have this kind of setup, and then we're looking for this to happen. And so that means if this comes down to the 50-day moving average and bounces, maybe that could be the place to buy it before and advance back above the 200-day moving average. So watch for that to play out, but we're going to need some green days to establish some support. Marathon under the 200-day moving average, bouncing today. Earnings are coming, bouncing off the 8-day today. Earnings are coming up on the 6th. Hut 8 has been great. It's been a really nice performer here, outperforming some of the others because unlike things like Riot, Hut 8 is still above the 200-day moving average, and Riot's been stuck below for months and months. So pretty clear here on Hut 8, though it is extended. Watch for a pullback on this. Riot, no thanks. It's garbage right now. Let's get into some cryptos. We'll start with Aave, just under the 50-day moving average. If this closes under the 50-day for 2 days in a row, then I'm going to remove it from the open idea list. Chainlink, someone just asked about Chainlink. I think it's David. Yeah, Chainlink looks great. It's holding the 50-day moving average, bit of a pullback, but the pullback's coming on low volume here, David. So I think you're fine to hold this. This is on our open idea list, and if this bounces off the 50-day and you're not in it, I think this could offer a nice entry. Here's AVAX. It's coming down to the 50-day moving average as well. Looks like pretty normal price action. Here's a low, here's a higher low, here's a higher low. Progressively higher lows coming into support. We do want to see this level hold, though. Again, 2 consecutive closes under the 50-day or the 21-day. Maybe you want to step aside. For Laura, this is Aerodrome. Drome. Oh, I thought it was Dome. Aerodrome Finance. Under the 21-day EMA, I don't think you want to do anything with this until it can get back above. Aptos has been a great performer. Really nice pop above 11 yesterday, back down to the 8-day today. This looks like it's really trying to trend, so I would keep an eye out on an entry for this. I don't see it right here, but keep an eye out for it to hold that 8-day. ICP is on our open idea list. It's just been chopping sideways. It did dip down the downside alert level here on Thursday of last week, but it didn't close above. And this is why I always say downside alert as opposed to stop, because we can see clear support levels and then we can see crypto dip right back down and come right back up. So that's why I recommend an alert and not a hard stop on your crypto trades. Here's SUI under the 21-day EMA. Watch for this to firm up. Hasn't done it yet. I mean, this has been super extended for a while, so I wouldn't be mad if this just went sideways for a bit. But if we start to get a bid into Bitcoin first or second week of November, that could be, and maybe we see this kind of thing where it fixes itself and comes back up into November, back above the 21-day. So watch for that. And we'll do Celestia as the last one here until we get to some final questions. Celestia TIA, it's okay. It's just like the others, under the 200-day, underperforming. Again, the question is, do I want to be in this or do I want to be in something like Solana that's already near the highs? Solana, guys, near the highs. I'm pounding the table on this one. Again, because it's an outperformer. And things that outperform when things are going sideways tend to do really well when the trend changes. So I'm just trying to, it's not, I don't have a crush on Solana. I got a crush on making money. And this has been a huge money maker for me. I'm up almost 1,000% on Solana. And because it has consolidated so nicely and so orderly and back above the moving averages more than any of these other altcoins, it just keeps sucking me back in. So Bitcoin, Solana, MicroStrategy, I think those are the real winners right here, right now. We'll see if that changes. If it does, we'll be ready. So I hope that's helpful, guys. Sorry, more questions here. MicroStrategy from David. Do we know how many coins they have in the current market cap? Yeah, let me get that for you, David. So if you go to Sailor Tracker, you can see how much money Michael Saylor has and how many Bitcoin they have. So here we go. This is their buys. They have 252,000 Bitcoin, and that Bitcoin is worth 16,069 billion. Every green dot is where Saylor has bought. So that's an easy way to look at it. Sailor Tracker. Now, in terms of the NAV, it's currently trading at a 2.5 NAV, but as we've seen in the past, it has been as high as 6. And if the NAV goes as high as 6 on MicroStrategy, then we could see Bitcoin MicroStrategy stock up around the $800 range. We'll see. That was the frenzy beforehand. I don't, can that happen again? I can't predict, but that's something that we'll be looking for because we can use that high NAV as a level to say, oh, wow, things are really overheated now. And then that's how we protect ourselves from getting sucked into more. Because if we know, okay, the previous high of the NAV was around 6 and it's at 4 right now, it's not, but hypothetically, if it does go up, then okay, we may have more upside. But if we get up to that high NAV level, you may hear your neighbors be like, "Oh, have you heard about this stock?" And again, it's like a sentiment indicator. Whoa, things are already highly elevated. Maybe I need to protect myself as opposed to getting sucked into more. And that's how you can ride some of that FOMO momentum to the upside, keeping a level head, is by understanding what has happened in the past. Okay, last one here from Laura. Should MSTX have an alert instead of a stop? You know, I mean, that's a tough one, Laura. I don't think you should be trading MSTX if you are underwater on it because it's a leveraged vehicle. It's not a stock. It's a derivative. It's a stock, but it's a derivative of another stock. So I would much rather have a stop on MSTX than a downside alert because again with stocks it's just a whole different animal. The stock market is so much bigger than the crypto market in terms of market cap, right? Like it's $100 trillion versus 1 trillion or 2 trillion. So because of that, I would much rather have a stop on MSTX. I'd much rather be forced to buy back a stock than a crypto because the crypto market is just smaller and easier to manipulate. So hopefully that makes sense, Laura. Appreciate that. Okay, guys, that's all I got for you today. That's about an hour. I appreciate you all sticking around. And yeah, big thanks to everyone contributing in the Crypto Market Mentor Telegram. I did send out a note yesterday about your Telegram username. So we had a handful of people in the Telegram who had already canceled their account. And so Karen did some house cleaning yesterday and got rid of some people. But if you haven't sent your name to Karen to let her know what your username is, then she may have deleted you by accident. We had that happen to a handful of people, and I had to go in there myself and manually organize that and then, circle back with Karen. So email Karen your username, or you may lose access to the Crypto Market Mentor Telegram. And if you change your username, totally fine. Just let Karen know because that's how we know who should be in the room and who shouldn't be. Dan, do you have any final thoughts, my friend?
Yeah, I do. Awesome job today.
Okay, thanks.
Really got a lot out of this, Scott, as usual. So I appreciate you going to all this extra work every week, every day, rather than just saying, "Well, here's the chart." There's just a whole lot more to this. It's as you know, I mean, it's kind of like AI. It's just an entirely new infrastructure and an entirely new business, and it's really important to keep that in mind. I think there was a reply on your last chart of the day where somebody said, I don't get." They weren't snarky or anything. It seemed pretty sincere. I don't get what Bitcoin is. Like I don't understand that. It's kind of like somebody telling you to buy the dollar.
Mm.
And I thought to myself, well, yeah, that's kind of, that's kind of exactly what it is, at least in one vein, just kind of like somebody telling you to buy the dollar. And wouldn't it be nice if the dollar was actually an appreciating currency rather than a depreciating currency? Yeah, I'd be all over buying dollars. I'd be buying a crap ton of them. As it is now, I'm not recommending anybody do this trade. I would rather short the dollar and use the proceeds of my short to buy Bitcoin. That seems to be that would be my best answer to this guy's reply. But I tend to not want to delve into areas that I'm not particularly competent to discuss. But yeah, to me, it's another currency. But as you've always described, it's a hell of a lot more than that. So anyway, I really appreciate all this work that you're doing, Scott. You're sure helping me become a better investor and trader. And I hear this Paul Tudor Jones guy seems to be a pretty sharp guy. So it's always a good idea to follow what he's doing.
I've heard he's done well. Yeah, I
I
agree.
think he has. I think he has. I've heard about him in the past from time to time.
Awesome.
So
Well,
anyway,
thanks so much, Dan. I appreciate you coming. I appreciate everyone coming. And if you were late or couldn't get to this, we'll get the recording out as soon as possible. We'll catch you in the next one. Have a great day.